Hello students, in the present video we will understand electricity company accounts under double accounting system. What is double accounting system and what is the accounting treatment and how the data pertaining to financial statement will be presented in double accounting system and what are the items included in financial statement. All those things we'll be understanding in this video. You come to the introduction part here, the basic thing you must remember that the public utility concerns like electricity company, water supplying organization, gas generation and railway companies are generally incorporated under the special act of parliament. As a result, the form of accounts is prescribed by the act itself, right? So act prescribes the accounting system procedure that should be followed by these concerns. You come to the what is double accounting system, please bear in mind double accounting system is a method of presenting annual final accounts or financial statements of public utility undertakings. In the sense, this is the procedure and format of presentation of data pertaining to financial statements or final accounts. Now we will enter into the accounting treatment. When you come to the accounting treatment, financial statements under double accounting system consist of four things. One is revenue account, net revenue account, capital account or receipts and expenditure on capital account. It will be called as. And further and finally, general balance sheet will be prepared. Alright. So we will understand separately all these four, how it will be prepared, what is it actually and what is the format and how it will be prepared. So when you come to the revenue account, what do you mean by revenue account? Revenue account is quite similar to the profit and loss account of a trading company or manufacturing concern. All expenses will be debited, all incomes will be credited. The general rule you are already aware. And most significant, depreciation will be debited to revenue account. Instead of deducting from assets on the asset side of the balance sheet, we will show it as a liability, as a reserve in the general balance sheet. That is a slight change, a significant change. Alright. This is the format of revenue account. When you see the format of revenue account, debit and credit, same profit and loss account kind of a format. Revenue account of XYZ electricity generation company for the year ended dash dash dash, we can prepare. So when you see on the expenses debit side, the expenses A is generation, the cost of generation of electricity. What is the cost of generation of electricity? That we will consider the items pertaining to that. Then B is distribution. What is the expenditure incurred towards distributing that electricity, whatever we have generated. Then C, public lamps. One of the head is given, right? When we are maintaining public lamps, what is the expenditure incurred towards maintenance of those public lamps? Rent, rates and taxes is a D item. Then E, management expenses, expenses pertaining to administration and office. Then law charges, expenditure pertaining to legal suits. Then finally G and H is pertaining to depreciation and special charges, right? So depreciation you are aware, special charges, bad debts will be written. So these are the expenditure. When you come to the income side, what is the basic income? Sale of energy for lighting, power, sale of energy under special act, public lighting, rental of meters. Meter rental is an income for electricity companies. And rent receivable, transfer fee, other items, miscellaneous receipts, sale of ashes. Sale of ashes is very significant when we are producing thermal electricity, right? What will happen? The ashes of the coal, when we burn the coal, whatever ashes we get, that will be sold off as a scrap. Especially to the brick manufacturing companies, they will use that ash for brick manufacturing for the construction process. So that is also revenue for electricity generation companies. Then reconnection and disconnection fee. Whenever reconnection and disconnection is taken place, then also the companies will charge certain amount. So this is the contents of profit revenue account, which is similar to profit and loss account. The balance, if it is debit, the balance carried to revenue account, net revenue account, right? That is profit will be transferred to profit and loss appropriation, like that we write in profit and loss account, no? So in the same way it will be transferred to net revenue account. When you come to the net revenue account, which is similar to the profit and loss appropriation account, right? So how we will prepare profit and loss appropriation account? The same manner we need to prepare, except one change. The change is the interest on debentures and interest on loans and interest on investment we used to consider in profit and loss account, no? So that will not be considered in revenue account. Instead, that will be considered in net revenue account, right? Either debit or credit. If interest on debenture debited, interest on investment will be credited, right? So this is the most significant item pertaining to net revenue account. Besides that, everything is same. And this is the format of net revenue account. Net revenue account, same, debit and credit. On the debit side, balance from last year's account, last year revenue account balance we will write. Debit side and credit side, both, either of these two will come. Then debit side, interest on loan, contingency reserve, interest on debentures, dividends, balance carried to balance sheet, the balancing figure. On the credit side, balance brought from the net revenue account, last year, current year balance, current year profit, interest on bank account, that is deposits or any investments we have, then balance carried to general balance sheet. This is the format of net revenue account, right? Then receipts and expenditure on capital account. This is the very important item, right? This is the format. In this receipts and expenditure on capital account, what we write? We write debit side expenditure, credit side receipt. And while furnishing the data, we write expenditure, then 3 columns will be made pertaining to amounts. One is opening balance, expenditure up to the end of previous year, in the sense end of previous is the current year opening. So opening balance we can say, expenditure incurred during the financial year, and summation of these two will be the total expenditure. In that format we will present the expenditure. In the same way, incomes even will be presented in the same form. That is, receipts at the beginning of the financial year, receipts during the year, and total receipts, right? The most significant here is we are segregating the balance sheet into two parts. One is receipts and expenditure on capital account, and another one is general balance sheet. That is most significant item, right? So in this receipts and expenditure on capital account, what all we consider? We consider all fixed assets and long-term loans and advances, in the sense how the company is going to procure the sources of finance. What are the sources of finance? How the company is going to get the long-term financial capital requirements, which will be applied in purchase of fixed asset. That will be kept in this, whereas current assets and current liabilities will be considered in the general balance sheet, right? So when you see the expenditure side, we have preliminary expenses, land and building, plant, mains, transformers, motors, general stores, special items. On the receipt side, we find ordinary shares, that is share capital, equity, then preference share capital, then debentures, any long-term loans, calls in advance, any other receipts which is of long-term in the nature, that will be recorded. And finally, the account will be closed, and we will find the balancing figure, as we are calling it as an account, but it is the balance sheet item nature, but we are calling it as an account. So we will close the account by making the balance. Then we will find out the balancing figure. So that balancing figure will be recorded either debit or credit, right, which will be transferred to general balance sheet, right? So this is the link and procedure of doing. So now we will understand general balance sheet. We come to the general balance sheet. This is the format of general balance sheet. In the beginning, liabilities and assets at both the sides, you are finding capital account, whatever balance we are getting in receipts and expenditure on capital account, that will be carried forward here as a capital account item. Then we will write all current assets and current liabilities, right, in the general balance sheet, like such as when you see current assets, stores, debtors. Here also any preliminary expenditure is there, we will also record, but not significantly. Then securities, special items, cash in hand, cash in bank. When you come to the liabilities, sundry creditors for capital expenditure, then sundry creditors for open account, net revenue account balance, whatever we are getting, that will be shown here, please bear in mind. Reserves and depreciation fund and special items, if any. So this is the format of preparation of general balance sheet, right? So why we are calling it as a double accounting system? Because we are segregating the balance sheet item into two parts. One is receipts and expenditure on capital account, another one is general balance sheet. By dividing the capital, long-term loans and fixed assets in receipts and expenditure on capital account, and current assets and current liabilities in general balance sheet. This is the most significant item, right? So thank you very much and wish you all the best for exams. Watching the video, thanks, and do subscribe my channel Mentor the Trusted Guide and motivate me to make more qualitative videos. I hope I made you understand this content of electricity company, and further I will be making the videos on how to solve the problems, right? Thank you very much.